Just 2.5 minutes before the closing bell rings, and we are looking at a market that is very tentative right now. We're waiting on GDP numbers for tomorrow. Janet Yellen may speak, but let's first go to Erin Gibbs. She's over at S&P Capital IQ. I don't know, you're looking at the price action here. It looks like the market's waiting for something today.
Yeah, and I think a lot of that is at GDP, but I think most of us are really expecting it to go up. The housing numbers, particularly the new home sales being 16% higher, was a big surprise. I think that's going to push us higher. And overall, I think we're really going to be looking at whether they're going to be raising rates. That's the big question, all about our rates can be raised in June.
Okay, so not knowing what the Fed's going to do, give me your favorite name here.
So right now, my absolute favorite is Bed Bath & Beyond. It's one of my picks for taking advantage of all these new home sales that we're seeing. They were late in the game to getting online, but they've really made some good headwinds. They also now are even paying a dividend, great free cash flow. They're coming off of lows. I know it's a beaten-up stock, but I think now is a good place to get in. You know,
as you look at the valuations of all stocks, there are some cheap ones now. Does it just make sense to look for great quality names that are paying that are at a price-to-earnings ratio that's not too expensive? And is there a level that does it got to be below 10, 9, PE of 11?
For me, it's also, are you turning around? And Bed Bath & Beyond is one of these companies that just started finally making money and growing their earnings, and I think this is the turnaround point.
Okay, but as you look at stocks, wouldn't you say it's better to be in stocks right now versus treasuries, which are yielding around 1.8%? It doesn't seem like that great opportunity.
It's the preferred asset class. That's absolutely right. And in particularly U.S. equities over all the rest of the world, it is the preferred asset class.
And as I'm looking, you know, everybody's depending so much on oil. We're going into a holiday weekend here. Gasoline is still extremely cheap compared to what it was even just a year ago, Erin. So why isn't the consumer then taking that money, and this is an age-old question, at least certainly in this cycle, and putting it into names like Bed Bath & Beyond?
You know, we're seeing the consumer connect. Not only are they're saving money on the gas, but they're making more money and they're saving more. And I think this is something that we've all learned after the global economic recession, to have a little more money in the bank, and that behavior isn't going to change so quickly.
And we should mention, too, durable goods for April surged today. Folks, it sounds like a fancy name, but it's anything that lasts more than 3 to 5 years. So you're talking big ticket items, right? And that looked like a pretty decent number.
Yeah, so we've been seeing the consumer, they're willing to spend money on durable goods, your mattresses, your sofas, your cars, but not on a new pair of shoes.
Great to see you, Erin. Thank you.